What if I told you that the world's second largest economy is on the brink of collapse? Imagine the economic giant that is China, teetering on the edge of a precipice. Can you picture a world where the dragon's economic fire is extinguished? It may seem far-fetched, but could there be some truth to these whispers of financial catastrophe? Are there cracks starting to show in the Great Wall of China's economy? Let's pull back the curtain, challenge the headlines, and examine the facts. Let's dive into the numbers and see what's really happening. China's economy, once a global powerhouse, is showing signs of a significant slowdown. Let's delve into the figures that illustrate this shift. Firstly, the gross domestic product, or GDP, growth rate. This is a key indicator of economic health. In 2023, China's GDP growth rate was around 6%, a far cry from the double-digit growth rates that were once the norm. This decline signals a shift from a rapidly growing emerging economy to a more mature, slower-paced one. Another key indicator is the unemployment rate. Despite government efforts to create jobs, the unemployment rate in China has been creeping up. In 2023, it hovered around 5%. This might not seem high, but considering China's population, it translates to millions of jobless individuals. Then there's the debt-to-GDP ratio. This ratio is a measure of a country's fiscal health. A higher ratio suggests that a country is borrowing more than it's producing, which is not a good sign. As of 2023, China's debt-to-GDP ratio was over 300%, one of the highest in the world. This high ratio indicates that China is heavily reliant on borrowing to fuel its economic growth. And finally, let's not forget about the dwindling foreign reserves. These reserves are a country's safety net, used to pay off international debts and stabilize the currency. In the past decade, China's foreign reserves have decreased dramatically, signaling potential economic instability. Each of these figures paints a part of the bigger picture. A picture of an economy that's slowing down, struggling with unemployment, burdened by debt, and facing potential instability. The implications are clear. Without significant changes, the slowdown could turn into a full-blown economic collapse. As the figures show, China's economy is not as robust as it once was. So why is the world's second-largest economy slowing down? Let's dip our toes into the waters of this question. The economic slowdown in China can be traced back to a triad of major causes: the US-China trade war, demographic challenges, and the country's growing debt problem. Let's start with the US-China trade war. This battle of tariffs and trade restrictions is more than just a political chess game. It's a full-blown storm on China's economic sea, creating waves of uncertainty for businesses and investors. Exports, a crucial lifeline of China's economy, are facing a significant hit, shrinking the country's growth prospects. Next on our list is the demographic challenge. China is grappling with an aging population and a declining birth rate thanks to its one-child policy from decades past. This shrinking workforce means fewer people are contributing to the economy, and more people are depending on it. It's a bit like having more passengers on a ship than crew members. It doesn't take a seasoned sailor to know that's not good for the voyage. Last, but certainly not least, is China's debt problem. Over the years, China has accumulated a mountain of debt, both public and corporate. Think of it as a giant iceberg that's lurking beneath the surface of China's economic ocean. While it might not be visible on the surface, it's a massive problem that threatens to capsize the entire ship. These three factors, the trade war, the demographic challenges, and the debt crisis, are like a perfect storm, each contributing its own gust of wind, whipping up the waves and rocking China's economic ship. It's a storm that's not easy to weather, and it's causing China's economic growth to slow down. And that's not all. These issues are intertwined, each one exacerbating the impact of the others. The trade war is making it harder for China to pay off its debt. The demographic challenges are making it harder for China to grow its way out of the debt. And the debt problem is making it harder for China to invest in the future. These factors combined are putting a huge strain on China's economy. The collapse of China's economy would have far-reaching implications. And when we say far-reaching, we mean it in the most literal sense. Let's take a closer look. As the world's second-largest economy, China has been a key player in global supply chains. It's the world's factory, producing a significant portion of the goods we use daily. So imagine if this production powerhouse were to falter. The repercussions would reverberate through every corner of the globe. From tech to textiles, industries would face unprecedented disruptions, leading to potential shortages and price hikes. But that's not all. China also holds a significant amount of global financial assets. A collapse would trigger a major sell-off in these assets, leading to instability in financial markets worldwide. We're talking about a ripple effect that could potentially plunge global markets into chaos. And we haven't even touched on geopolitical dynamics yet. As one of the world's leading powers, China's economic health is closely tied to its political influence. A weaker economy could undermine China's ability to project power on the global stage. This could lead to a significant shift in international relations, with some countries potentially gaining more influence. In the world of economics, every action has a reaction. And in this case, the reaction to China's economic collapse would be felt across nations, industries, and people. It's a sobering thought, but one that underscores the interconnectedness of our global economy. Now, does this mean we're all doomed? Not necessarily. Economies are complex, dynamic systems that can adapt and recover over time, but it does highlight the need for diversification and resilience in our economic structures. The world is watching closely as China's economic struggles continue. Because when the dragon stumbles, the tremors are felt far and wide. Let's just hope that stumble doesn't turn into a fall. So what does the future hold for China's economy? Well, the path ahead is certainly not an easy one, and it's shrouded in complexities and uncertainties. Some economists suggest a bleak outlook, predicting that the dragon's economic growth may continue to slow down, marred by the weight of its own financial system. The ghost towns, empty malls, and underused infrastructure may become a common sight as the country grapples with its mounting debts. However, let's not forget that China's economy is like a giant ship. It might be slow to turn around, but it's also incredibly resilient. Despite the current headwinds, there are experts who believe that with the right reforms, China can navigate its way through the storm. One potential scenario involves China transitioning from an investment-driven economy to one focused on consumption and services. This would involve not just economic but also social and political changes. It's a monumental task, but if successfully implemented, it could put China's economy back on a sustainable growth path. Then there's the potential for technological innovation. China is already a global powerhouse in areas like e-commerce, digital payments, and artificial intelligence. Embracing these sectors even further could provide a much-needed boost to the economy. And let's not disregard the role of the government. Yes, the very same government whose policies have often been criticized could be the one to steer the economy in the right direction. Through a combination of fiscal stimulus, monetary easing, and structural reforms, it's possible that China could stabilize its economy. However, these are all ifs and buts. The future of China's economy is as unpredictable as the roll of a dice. It's a high-stakes game with global repercussions. There are potential risks, yes, but there are also opportunities. Only time will tell if China's economy can recover from its current challenges. The story of China's economy is far from over. We've journeyed through the labyrinth of facts and figures, shedding light on the causes of the economic slowdown. We've explored the impact of the economic collapse, not just within the confines of China, but its ripple effects across the globe. From the shifting sands of the global trade landscape to the domestic challenges China faces, we've unraveled the intricate tapestry of factors at play. We've highlighted the importance of understanding these global economic trends. They're not just numbers on a page, but real, tangible factors that shape our world and our future. We've peered into the crystal ball, speculating on the future of China's economy. We've discussed the potential paths it could take, from revitalization to further decline, and the global implications of each scenario. In this ever-evolving world, knowledge is power. Understanding the undercurrents shaping global economies enables us to make informed decisions, whether we're world leaders, economists, or everyday citizens. It's not just about China's economy, it's about recognizing the interconnectedness of our global economic fabric and the role each nation plays in this grand tapestry. To stay updated on developments in China's economy and other wealth-building strategies, make sure to subscribe to our channel.